Good morning, everybody, and happy Monday. We've got a full, fresh 5-session trading set ahead of us. Going to start off with some options expiration hangover this morning. I'll clarify what that is in just a minute, and then we're off to the races. So let's just make sure we're good to go here in audio and visual, which I think we are. And then we're going to be in good shape here. Okay. Very good. Yeah, let's get started. Again, good morning, everybody, and happy Monday. Serge Berger here from thestudytrader.com. This is our morning call, and we're going to spend the next 10 to 15 minutes together going over some things on my notepad. If you're here for the very first time, I want to welcome you. Thanks for being here, and please make sure you subscribe to our YouTube channel. It's very important to us. And certainly for you, so you get updated in real time when we go live with analysis or have any other analysis, podcast insights, and so on and so forth. We're putting a lot of effort into the YouTube channel to make sure we are able to reach as many people as possible and educate as many people as possible about the markets. I truly believe that we're at a critical juncture here in the market, and that there's a significant amount of complacency. And I think right now this educational stuff is really, really important so that we can keep as many people as possible from making, maybe silly mistakes might be one way of putting that. All right, top few things on my notepad. In fact, I need to quickly get up my document here so I have it as well. So we'll start off by looking at the market here in terms of the timing. We do have what's called options expiration hangover this morning. So we'll talk about that. Then what we'll do is we are going to look at a few sort of critical charts around the market's current juncture, away from a price perspective, but from a big picture perspective as it regards to basically valuations. A fair look at valuations. And then I want to look at Intel, and I still think that stock has maybe possibly a lot higher to go over time. So I would like to spend a bit of time on that because there might be a thematic situation taking place with Intel, MP Materials, and what that really means for other opportunities going forward. And a lot of that will be momentum opportunities that we want to take advantage of with our momentum indicator, which is the TSD Trender momentum indicator. Remember, we have a three-pronged approach. We use momentum for trades. We look for extreme oversold and overbought opportunities, and of course, we look for the big trend-following opportunities, where really ultimately the biggest money-making opportunities really are from a wealth-building perspective. So here is the S&P 500 chart, and I'm just putting this up here so you can see we last week had another up week on a weekly basis in the S&P, and the sort of inverse of that would be volatility. You can see the VIX still down here once again this morning around 15. So what we're likely going to experience this morning is a little bit of options expiration hangover, and really all that means is that we're likely going to see some pretty choppy price action, a little bit like what we saw last Friday, actually, as dealers and other market participants have to kind of reposition, reopen positions, whatever they have to do, right? And that can cause a whole bunch of choppiness in the equity market. So something to be aware of this morning. I typically try to do very little, if any, trades in that kind of environment. I wait it out a little bit, unless there's something compelling setting up intraday that makes a lot of sense otherwise. So that's just a quick point number one. Now, we can talk about the S&P having made fresh all-time highs and how that's, from a momentum perspective, still very much intact. In fact, for all of you guys using the trend or momentum indicator, you will see that the S&P 500 remains in a bullish momentum move. That's the buy signal we got in late April. The S&P remains bullish momentum, so that even the short-term stuff is nowhere near changing to bearish yet, although that can, of course, happen pretty quickly if it does. Now, what I'd like to do is I'd like to show you two charts that I think are probably some of the most important things that I spent my weekend on looking at. So number one is this chart. This chart here is essentially a price to book value ratio. So the price of a stock divided by its book value. Book value is basically after you sell everything, what's the net sort of value left of a company, right? And so you can see that the last time we had book value, a price to book value in the S&P as we have right now, was in March of the year 2000. I remember the March of the year 2000 very vividly because I was supposed to start a job at an investment bank about a couple months later, and it was literally taken back about literally around maybe there or even like maybe a couple of weeks later. It does not mean the market's meant to crash here. It's just meant to be a bit of a. I just would like to raise it to people so they don't get too complacent. Sometimes we get people, telling us that we're bearish. This is not about being bearish. It's about being awareness versus being bearish. If we're aware where we are, we should be at least hedging to some extent, right? From a portfolio perspective, from a trading perspective, if all we do is trade, very, very, very short term, we can certainly continue to ride the momentum, but momentum can change very fast. That's the downside of that. So it's just very, very important to understand that. So price to book value, number one, again, I would be careful on that. The second chart, very, very similar idea, is this shows the NASDAQ 100 or the NASDAQ itself, excuse me, and it shows that it's now worth almost 150% of all the money in the United States. So basically something called M2. And that's obviously maybe not obviously, but that is the highest in history. And typically what we've seen when we get to these kind of levels is that we tend to see a pretty big swing in the opposite direction. Again, you can see we reached that level right in the year 2000. So listen, I don't know what the trigger is for this. I wouldn't be surprised if something comes out of NVIDIA next week that sets people to be a bit afraid. I don't know. That's not a forecast. I truly have no clue. But given the fact that the concentration and the momentum still comes from AI, I think, that seems plausible. Now, the other thing I think about, like people who buy NVIDIA here and other companies and Microsoft, these companies are spending, especially the big scalers, they're spending 35% on R&D, right? On CapEx of revenue, and that's a lot of money. They're not going to be able to do that for infinity, and so when that comes down, that's probably when you're going to see a big unwind or an acceleration of the unwind. We've already seen a lot of people start hedging and reducing their positions in Microsoft and all those big names from a rebalancing perspective. But I think you could see outright, more aggressive selling if we were to see something that then puts into question that these companies aren't going to, for infinity, spend 35% on CapEx, right? And that's going to come. It's not even a doubt. The question is when. And I do not know when, but I do know that when I look at a chart like this to me is a bit concerning. So I'd love to hear some feedback, folks, if this is interesting stuff that you would like to see going forward, or if you'd prefer me to show you a 5-minute chart of Roblox so you can day ticket, right? It's an honest question because everyone has a bit of a different kind of focus. So we try to show you a bit of everything. But to me, this is big because this is the dog wagging the tail. So that's number one. The second thing I wanted to really focus on is sort of an idea of a trend, maybe a trend of what we've seen now a couple times already. And that has to do with the following two charts. So this here is a chart of a company called MP Materials. The ticker symbol is MP. And what's interesting about this situation is that the U.S. government essentially took a bit of a stake in this company, right, in some shape or form. And I think it's critical to see what happened. So I'm going to go to the actual chart so I can draw on it a bit better than I can on that image that I sent to my colleague. So this is MP Materials, and I'm going to assume that the day when the government announced that sort of stake was probably there. I'm going to assume it was the 10th of July. And by all means, you guys can correct me on that. I haven't had the time to look at it. My point is that after that initial jump, the stock ended up rallying so far another 63%, right? Now, we had a similar situation take place last week when the government announced that they're taking some sort of a stake in Intel. And we talked about this on Friday, and that led the stock to rally sharply. However, if MP Materials is any sort of guidance, there still could be another 50+% to go here. That's a bit of a stretch of a comparison, to be honest with you. But my point is that when these kind of momentum plays get going, they don't have to be much more vicious than we would think. And Intel, is a national security play. That's how it's being described. To me, that makes sense. Whether that's right or wrong, I don't know. I'm just saying that it makes sense, or I can reason with it. And so what I will also point out to you with Intel is that this is a stock that's been dramatically underperforming, like, for example, the rest of the semiconductor complex, particularly NVIDIA. I mean, everything's has underperformed NVIDIA, so that's nothing new. But, I do think there's technically a lot of reasons why this stock could keep going outside of the structural reason. The structural reason being that stake in the government for national security reasons, the stake from the government in Intel for national security reasons. So what I'm trying to show you is, and I'm gonna make this a two chart screen now. So bear with me for just a quick second. Is that, and I have my colleagues actually writing a quick piece on this that you guys will hopefully receive later on today or tomorrow. I want to just point out that it's possible, and this is, I don't know this obviously, nothing's for sure, but I wouldn't be entirely surprised if this is a new pocket of opportunities, meaning when the government comes out and says, hey, this company we have to take some sort of a national stake in for national security reasons, that might lead to more momentum trades. Now, it's, to me, what's important here is I look at this, for me, it's important to tell you, I look at this as momentum. I don't look at these as necessarily things that have to go up forever, although they can certainly go up for quite a bit. But I look at it first and foremost as momentum, because momentum starts before trends, right? So if I were to go and look at Intel, so you can see we received a buy signal in Intel using our trender momentum indicator. And again, if you don't use the trender yet, by all means, get off your sofa and use it. And if you don't have it yet, get it. I mean, it's just so critical. So this here is Intel, and you can see we had a momentum sell signal last in July, and then we reached a profit target. Now we have a new momentum buy signal. And so not until the stock reaches its trailing stop, is it anywhere near over. So I think the stock can go potentially, unless we get some outside news here, could potentially go a lot higher based on momentum, based on the structural reasons why the stock is going higher from a momentum perspective. So again, I'm not trying to say these are the two same exact things, but the thematics that, at least that I see here, is a government taking an interest in a company for, to some extent, national security reasons, right? So let me just quickly read the comments. Bob is getting smoked on his booth. Yeah, I can see why. Thank you, Wayne. Appreciate it. Yeah. There you go. Yeah, so 15% stake, Daily Trader says, in MP Materials. So yeah, look, I mean, this is something that I think is interesting. Again, I look at this more as a momentum opportunity. Now, the best news of all is that we don't need. Oh, this is the same chart twice, isn't it? Is that we don't actually need to be able to pinpoint this from a headline perspective. We will see, like, our trender momentum indicator tells us when a new momentum opportunity appears every day, right? So I don't even have to be aware of the news. I can just watch it and then go check the news in retrospect if I want to. So, it's just a ticker if you want to look at it that way. And if a momentum opportunity pops up, then we will be told. So I don't know about Intel, obviously, specifically what it's going to do. I don't have a crystal ball. But I will tell you that I think, all else being equal, I wouldn't be surprised if the stock sort of goes towards 29. If you're wondering about that, I have yet to buy out upside calls. I'm thinking about doing that later on this morning. But you know, when I do that, usually it goes down afterwards right away until I'm right, if I'm right. But so 29 to me, if anyone's interested, there's an unfilled gap. That's the down gap from the 1st of August of 2024, so last year. And so if that target were to be reached, and again, I don't know if it first goes down a bit before it goes up. If it goes up, you know, that's probably another 18, 19% of the upside. I think what people need to do here, and I see a lot of this happening. What's really important, and this is what we've been preaching, so to speak, all year, is it's very, very easy to let one's political biases influence what one does in the markets. And that can be rewarded, but it can also go completely against because we just don't know. So if you're now thinking you like this Intel idea because of whatever reason you believe, right? At the end of the day, it's about the signal. So what I can tell you is that if we get proven wrong with this, and we change and the facts change as far as basically the data, the price point, the pricing goes in the market, then we are done with it. We're not going to try to staunchly defend the idea by having some political bias. That's not the point. Political bias that's one thing in the markets. It usually doesn't help over time because things can change. So, if you're bullish Intel because of political reasons and your political bias, I would be very, very careful with that attitude because that can backfire pretty badly. So, we're looking at it as what I just described, right? In addition to that, and quite frankly, more importantly, so the signal that we have, the signal will always override the news for us because we can't assume that all the news is based in the market. I know that's the efficient market theory, which I don't believe in it to that extent. I believe there's also always a lot of stuff that the market's not pricing. Otherwise, why would Intel jump 7% the other day, plus another couple percent, 10% a couple days? If the market would have priced this in or known it, the market would already been up 25. So you have to think about that a little bit this way. So that's the Set the Market for today, Monday. If you are a Trade Ops member, we'll see you guys over there. It's going to be probably a pretty busy week, I would imagine, given the fact that we're now past options expiration. We've got some more. We have that Trump-Putin meeting on Alaska that seemed to be kind of going, sort of roughly how people expected it on average, I would imagine. And now today we have another meeting in the White House with Zelensky, so that's going to be a headline grabber. That's the only reason I'm mentioning it. But I think the market's getting a bit tired here. That's my take. And again, based on the charts I showed you, it could not just be a short-term thing. It could also be a structural top. That's too early to tell, but there is the risk of that. And of course, very few people are wanting to hear that, much less believe that. But anyway, we'll continue monitoring, stay open-minded. We're not here to be opinionated. We're here to make money. At least that's my view. Hope see you guys over in Trade Ops and back here tomorrow at 9 o'clock Eastern. Thanks so much and have a great day.